Hi, my name is Rafael Barbosa. I am an economics PhD job market candidate from the European University Institute, and this is a short presentation of my job market paper in co-authorship with Simon Skipka. So this paper deals with the differences between standard property taxation, which taxes total house value, and land value taxation, which taxes property based only on the value of land, disregarding the structures that are built on the land. So the research question of the paper is, what are the effects of replacing a tax on house values for a land value tax? So this is an important question because although land value taxation has been recognized as a more efficient form of taxation since Adam Smith, most countries continue to rely on some form of house value taxation. The reason land value taxation is considered superior is because it eliminates the implicit taxation of structures, thus creating incentives for more housing supply and lower rents. However, one of the main obstacles to the widespread implementation of a land value tax is the uncertainty regarding the distributional impact, meaning how it will affect households with different incomes compared to a tax on house values. This paper provides the first empirical analysis at a household level of the differences in distributions of house and land value based on high quality data on land values for Germany. Second, the paper builds the first theoretical model which incorporates both the distributional impacts and the efficiency gains from adopting a land value tax. The data set in this paper was built by merging household survey data containing information on income and house value with data on official land values collected by regional statistical offices in Germany. So we did this by matching the precise location, primary residences of owner-occupied households in the German socioeconomic panel with our geodata on lot and land values for 5 states in Germany. Using this data, we built a measure of how much a household's house value is accounted by the value of the land. We call this measure the household's land value share. We use this land value share to infer on the distributional impact of land value tax compared to a house value tax. Households with a low land value share would pay less under a land value tax and vice versa. So here we have the distribution that we find of this land value share measure. Our empirical analysis shows average land value share to be 33% for the full sample. However, we find considerable heterogeneity for this measure across regions, with average land value shares in big cities being much higher, close to 50%, while in rural areas it's a third of that. We also present 3 novel findings concerning the distribution of land value share within region. First, there's large heterogeneity in land value, meaning there are potentially large distributional differences between different taxation regimes. Second, there is large heterogeneity within income level, meaning there will be big winners and losers across all income levels. And third, land value share is weakly negatively correlated with income, meaning those with lower income are on average more likely to end up with a higher tax burden under the land value tax. However, these empirical results do not take into account the positive efficiency gains of land value tax we talked previously. And so to address that issue, we construct a theoretical model capable of replicating our empirical findings, and which also incorporates general equilibrium effects in renters. The model features heterogeneous agents, renters who buy housing services from a housing firm, while landowners own land and invest in structures to produce their own housing services. Landowners are themselves heterogeneous and differ in their productivity and land holdings. The model also includes 2 different regions in order to capture different impacts in urban and rural areas, because we saw that was important in the empirical section. And we have renters that can migrate between regions to ensure real wage equalization. So the heart of the model lies on the decision of how much to invest in structures to produce housing services, depending on the type of property taxes. Taxes on house value discourage investment in housing structures as they increase the marginal cost of investing due to the associated increase in tax burden, while the land value tax does not generate this type of inefficiency. The model then is calibrated to match our empirical findings, the most crucial of which are those related to the land value share. So the results from the model can be broken down into aggregate and distributional results. On the aggregate level, we find the land value tax regime substantially increases investment in structures and reduces rents in steady state. And these effects are stronger in rural areas, leading to migration from the urban region to the rural region and promotes regional convergence. Distributionally, we find that renters benefit due to the lower rents. Concerning landowners, we find some regressive tendency in cities, with low-income households on average paying more under the land value tax. However, the changes in cities are small in consumption equivalence terms. In the rural region, we find most landowners benefit, although those with the highest landholdings and the lowest income are also hurt. Overall, the impact on social welfare of a land value tax is positive, driven by the positive effects on renters, most of them residing in cities, and by the effects on landowners in rural areas. So the paper contributes to the literature on two fronts. On the empirical front, we construct a high quality data set, which improves upon the literature, first by using official land value estimates rather than using our own estimations, and second, by carrying out the analysis at a household level, whereas previous literature performed regional analysis. Using this data, we reach novel findings regarding the distribution of house value and land value and how they relate to each other and to household income. On the theory front, our paper is the first to model the efficiency equity trade-off that comes from using land value tax when low-income families own houses with a high land value share. Most of the literature on land value taxation is focused on highlighting its positive efficiency aspects or intergenerational inequality. Using this model, we arrive at new results on the aggregate and distributional impact of replacing a house value tax with a land value tax. So that's it. I hope you enjoyed this presentation. If you want to read more about my job market paper or some of my other research, please visit my website. Thank you for watching.